Welcome back, everybody. American Express has been on an insane run, up over 80% in the past year, which has made it the best overall performer in my portfolio. But Amex announced earnings on Friday, and the stock dropped about 3%. So was Amex's run over? Well, in this video, we're going to break it all down and talk about it. So let's go ahead and get started. Now, first off, let's dig into what American Express actually announced on Friday. They had total revenues up 8%, which was in line of expectations, and earnings per share was up 6%, which beat expectations. Plus, Amex raised their full-year earnings per share guidance again after raising it just last quarter as well. They did say they expect to hit their revenue guidance for the year, coming in around 9%, but that was at the low end of their 9 to 11% range that they originally gave. So overall, it seemed like a pretty solid quarter, but the stock was still down 3% for the day Friday and got down as much as over 5% in intraday trading. So what is actually going on? Now, obviously, I hold Amex in my portfolio, and here's my overall story and what I'm monitoring for the stock. Amex's business model is that of a card network plus a bank, which differentiates it from Visa and MasterCard. They have an extremely strong brand and appeal to a high-quality group of customers with premium products that have high fees, which we're actually going to be talking about more in a minute. Now, lastly, as an actual bank, they are impacted by banking regulations. Now, in terms of what I'm monitoring, currently I only have these 4 things on my list: overall revenue growth, delinquency and charge-off metrics, dividend growth rate, and regulatory impacts. And we're going to come back to this later because as I was looking through this earnings report, I realized there's probably some things I need to add to my monitoring list. But first, let's dig a little deeper on what Amex reported. Amex had total revenues of $16.6 billion, up 8% year over year, and they had earnings per share growth of 6%. And if we take a look at the revenue breakdown, we see that card fees and net interest income are driving a lot of the growth, which was actually the same story as last quarter. And now, why is that important? Well, let's break down each one of the revenue types so we know what they mean. Now, first up, we have discount revenue, and that's the amount that Amex earns from merchants for processing transactions. So it's the fee that merchants pay to accept Amex cards. Next is net card fees, and that's the amount that Amex earns from annual card membership fees. Then there's service fees, which is the amount that Amex earns on a broad number of value-added services, including data and analytics services, marketing services, also travel commissions, and card member delinquency fees. Next is process revenue, which is the amount that Amex earns from partnership agreements, so things like royalties and fees for transactions processed from Amex-branded cards issued by other financial institutions. And then lastly, we have net interest income, which is the amount that Amex earns on the difference between the interest income they collect from things like card member balances and the interest expense they incur from things like paying interest on member deposits. So the reason why I say it's interesting that Amex's highest growth revenue areas are card member fees and interest income is because neither one of those areas are directly related to card member spending. And if you're wondering why that's important, just think about it like this. When people talk about Costco, obviously they talk about what an amazing company they are. And yes, spending in their stores may fluctuate a bit with the economy depending on how things are going. But they also have this consistent recurring stream of membership fees that not only provides a predictable stream of recurring income, but it also promotes more spending within their stores because people want to get the most out of their membership. And so that recurring membership fee helps insulate their business. And now with Amex, it's a similar story. Members are paying annual card fees for the perks of Amex membership, and it helps incentivize them to actually spend on their card, which helps Amex from a revenue predictability standpoint, but also in helping to promote more spend on their cards at the same time. And if we look at the trend, it's pretty obvious because 2 years ago in 2022, net card fees and net interest income, the two main revenue categories that aren't tied to spend, made up about 30% of Amex's total revenue. But now in Q3 2024, they make up about 37% of their total revenue, and they're growing in the mid-double digits. And Amex's management team talked about this in their earnings report, saying they continue to attract large numbers of new premium card members with 3.3 million new card acquisitions while maintaining high retention rates and excellent credit performance. And in demographics that hopefully will do well for a long time, with 80% of new accounts on their new Gold Card being millennials and Gen Z. And to me, this is a very positive story for Amex because new premium card members means additional premium card member fees, and that adds that level of predictability to their revenues going forward, assuming, and this is a big assumption, that they can keep the expenses and benefits of having those premium card members under wraps. And that's where evaluating their expenses breakdown comes into play. Now, let's talk about each one like we did with revenues so that we know exactly what we're talking about. Now, first up, you have card member rewards, which are expenses related to their card reward programs, primarily things like membership rewards, cashback, and co-brand rewards, like if you're accumulating Delta Sky miles for Amex card spend. Then there's business development, which are expenses related to expand and support Amex's business partnerships, so things like co-brand partners and corporate incentive payments. Next is card member services, which are expenses related to providing value-added benefits to Amex card members. So things like your airport lounge access, travel services, and fraud protection, etc. These are a lot of the added perks that you get with the premium Amex cards. Then next is marketing, which I think is pretty self-explanatory, but that's basically the cost of promoting Amex's products and services. And then lastly, operating expenses is basically all of the other day-to-day expenses that aren't included in the other expense categories. So as you can see, outside of marketing, which was a planned ramp-up that they talked about last quarter, the highest categories of expense growth are card member rewards and card member services, which are directly tied to the increase of premium card members. So it's not that that's necessarily a bad thing, but I think it's something that we should keep an eye on going forward to make sure that all the new premium card members remain to be profitable for Amex. In my opinion, it's going to be important to see how those expenses trend over time to understand if the cost versus value of the premium cards continues to be profitable. The other aspect to look for is the overall quality of Amex's portfolio, and I talked about how delinquency and charge-off rates are two things that I constantly monitor. And as we can see, delinquency rates are at 1.3%, still lower than pre-pandemic levels, and net charge-off rates actually dropped down to 1.9%, again lower than pre-pandemic levels. But one thing that a few people noticed is that they increased their total provision for credit losses by about $264 million and over $1.3 billion overall, which some say could be a sign that they believe future losses are coming. But I mentioned before that when banks do this, I actually view it as a positive because it means that they're being proactive, making sure that they have reserve available in case losses happen. And when I looked at the total amount, it didn't look that it was crazy based on their most recent history. So I'll take it as management being cautious, and we'll just see what happens. So overall, it really looked like a strong quarter to me, but if that's the case, why did Amex drop 3% on Friday? Now, obviously, we don't really know for sure why those things happen, but I think it's likely related to these things. Because while revenue growth is still planning to be within their original forecast range, they narrowed the range from 9 to 11% to just about 9%. So some people are taking that as a slowing revenue signal. And if you look at Amex's recent history with revenue, it's a pretty consistent deceleration. Plus, they kind of gave a softer revenue outlook based on how things are going in the economy, saying that they would need to accelerate billings next year to hit that 10% revenue growth goal. So I think that's definitely part of it. But also, people were talking about the increased provision for credit losses as a signal that the consumer may be weakening and they're preparing for increased loss. And look, either one of those things could have definitely contributed to the drop on Friday, but to me, I think the more likely reason is something that I talk about all the time, in that not every move really means anything, and it's probably just traders trading. Because Amex has been on an amazing run, up over 80% in the past year, with 25% earnings per share growth over the past year, even with their decelerating revenues. And the reality is that no stock goes up forever, and it's already been going up a lot. So it could simply be people taking profits on a really good trade, and no other deep meaning about the future outlook of the company. Plus, last quarter, the stock dropped about 5% or so a few days after earnings, and then proceeded to still be up over 11% for the quarter, almost doubling the S&P 500 return. So all that being said, what are my thoughts on Amex going forward? Now, in general, I'm a huge fan of American Express, and I feel like it's not a stock that I talk about a lot on the channel, even though I've held it for a long time, and it's just been crushing it as my top performer in my whole portfolio. But it just kind of does what it does each quarter, and there's really not much to talk about. But when we take a look at the trends in their business, there's really a lot of positive things happening. They're crushing their earnings per share guidance, they're growing premium card members, the credit quality of their portfolio is one of the best in the whole industry, and they're expanding their non-spend related revenue to be a greater percentage of their revenue mix. And all those are really good things, and I didn't even mention that we got an update on the Basel III Endgame proposal last month. If you remember, the Basel III Endgame risk was one where regulators were trying to increase the capital requirements for banks at a certain threshold, and Amex would have been one of those banks. But in September, the Fed proposal had been updated, which would be a positive development for Amex. Now, we still don't know what's going to happen with that officially, but it's definitely a step in the right direction for Amex shareholders. Now, in terms of the things to watch going forward, though, I think the revenue deceleration could definitely be a concern, and then also expense growth, especially as it relates to card member rewards and services. And then lastly, of course, any resolution to the Basel III endgame requirements is going to be big. And like I mentioned earlier, when I was working through this earnings report, I noticed that my documented list of what I'm monitoring for Amex really needed to be updated. So I added some things to go from this to this, which now includes revenue mix and expense growth, so that'll be something that I add to my monitoring spreadsheet for them as well. Overall though, I think Amex had a really strong quarter and they're just an extremely high quality company to me. Now, I wouldn't be surprised if the stock price traded flat or down for a little while though, just because it's been a really strong run. But long term, I think the company fundamentals look good, assuming they can continue hitting their earnings per share targets, even with some softer spending trends due to economic factors. Either way, I'm obviously planning to hold my Amex position, and I have no plans to sell. So what did you all think of Amex's earnings report? Anything stick out to you? Something you're concerned about? Let me know down in the comments below. Now, if you want to know more about how Amex is different from Visa and MasterCard, I break it down in a lot more detail in this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.